All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Quite a few interesting things out there in the market today. And, when you put it in the context of this week and overlay it to last week, it gets even more interesting. And, it's one of those where I know a lot of people, they trade like this. They go, okay, I'm out. I'm going to wait to get in, and I'm going to wait for, the absolute perfect opportunity. Okay, do I get the green light? Okay, green light, go. And they're waiting for that silver bullet, that green light, and generally that just doesn't come until it's too late. But what you tend to see during times that are tumultuous is you tend to see some different things start to happen in the market, and we're seeing this happen in a few areas. The one I want to talk about here is gold, right? And this is an area where we are just starting to see something a little bit different. And I'm going to get rid of our indicators here for now. And I've talked about gold before. We talked about it back here in August and September, how gold is probably bottomed for a little bit. One of the reasonings I gave for gold probably bottoming was the fact that the U.S. dollar probably topped. And perhaps one of the biggest abnormalities is the fact that the U.S. dollar has been going up and gold has been going up. Now, some will say, well, that's the fear trade and all of that. But, when you look at gold, when you look at when gold has its big up days, it's not on the big down days in the market. It has acted a little more fear trade-ish to a small degree, but nowhere near what it has been over history, and I don't expect it to go back to that, right? I think the market has got to a point where the illogic of holding gold for a calamity is actually illogical. Where the market kind of gets it and goes, okay, that is kind of dumb. There are many better things to hold for some sort of calamity than gold. And gold has traded, differently over the last few years. Quantitative easing by the Fed and now quantitative tightening that the Fed is doing now, have had something to do with it. But I'm not here to get into the whys of gold up and down and all of that. Let's just break down the charts here and take a look at some of the changes that have been coming into play. First thing we can see on this daily chart is this low here from August, and then come back and retest it, and boom, we go up to a new short-term high. So for the first time in a while, we get a higher high, HH here, on gold. Okay, gold then pulls back. What do we get? We get a higher low, right? Higher low. Gold goes up again. What do we get? A higher high. What is a series of higher highs and higher lows called? An upward trend, right? So we're getting a trend differential here. Now, Elliott wave theorists are going to look at this and say this is a corrective wave. Wave A, B, C, D, E, or 1, 2, 3, 4, 5. Now this is the correction pattern to this big pullback, and a down we go, right? That's how Elliott wave theorists are going to look at it. For the most part, they tend to analyze things in real time a little bit differently because it always works in hindsight, but in real time, it's, it could be, like most technical analysis. But when we come in and we look at it, gold tends to follow retracements. And if we come in and just slap on a retracement here, maybe. Let's see, I lost my icons, but let's see. Can we put it on here, or is it dead? Fibonacci retracement. Yeah, it's not wanting me to retrace. Let's try this once more. No, we must have a little glitch here on stock charts coming in. We'll try to open that in a new tab here. But we're getting up into the retracement areas. That's my point here. But overall, higher highs, higher lows coming into play. If we back this out to a monthly chart. This is what gold looks like since 2005, right? And really the last, 6-7 years, gold's been pretty darn flat. There's not been a trending nature to gold. It has not been it has not been a hot commodity. It has lost a lot of its talk in the media and everything else, and it's lost some of its bigger trends. It's kind of gone quiet. It's gone dark. If you're looking to be a buyer of gold, you kind of like that. But you also know that for it to really get some big upside, it needs to have some more chatter come into play. But one of the things that's happening with gold is if we just put on a simple 7-month moving average, and let's see here, if we come in, simple moving average, we come into 7, we put that on here. This is the first month since earlier this year that gold is trading above the 7-month moving average, making this change, right? Now it's had some of these changes before, and not had a ton of upside. It's been moderate, but it hasn't had a lot of downside when it's traded above the 7-month average. It has broken below the 7-month average before having any of the major type of downside associated with it. So we have that happening. If we come in and zoom in a little bit to something like a weekly on gold, you can kind of see what this looks like in terms of the higher lows that we talked about on the daily chart, just coming in right here with the higher lows. But you can see 2016, end of 2016, now middle 2018. These lows have been higher overall, and we've had a series of higher lows. Now, we haven't had the higher highs come in. It's been kind of flat up here around 128. It's not been able to bust through that level, but we have the higher low elements in play for gold. One of the things that we tend to see when gold turns around and goes bullish is we tend to see that the miners outperform. So if we come in and we take a look at the GDX, which is the gold mining ETF, and we compare that, with the GLD, right? And we say, okay, who's lagging, who's leading, type of a thing, right? We can see that the GDX has kind of been lagging gold for a long time. And if I just come in and put the GDX chart here, you'll notice GDX has kind of been bleeding relative to gold after this big pop in 2016. But if we go back to GLD, that big pop in 2016 where, gold actually led the miners. Let me flip this back to the way I had it. There we go. Okay, or where the miners led gold, right? You'll notice it just inverted this chart, but the miners outperformed gold right here in a big way, and that's what you tend to see on big bullish moves, right? We saw the miners outperform gold during its latest drop. Most drops, the miners lag gold. That is a very common thing to see. Back here, 2014, miners are lagging gold during this time. Yes, gold's dropping, but miners are falling faster. And one of the things we tend to see when gold finally bottoms is we tend to see gold sell off and the miners pretty much outperform gold. Well, in this drop right here, we saw the miners outperform gold until the very end. And once we got down to this low, the miners really took it on the chin. They really lagged. But one of the things that's starting to happen on this move higher in gold is we are seeing the miners outperform. This is a positive sign typically for gold to continue to go higher. When the miners are outperforming, gold tends to go up. Okay, so we have some chart dynamics that are switching, that are changing. We have a very nice correlation here. Well, how do you play it? How do you play the bullish side on gold? Do you play it with gold? Do you play it with the miners? Well, if the miners tend to outperform when gold goes up, who do you want to play it with? Hey, you want to play it with the miners, right? You naturally want to play it with the gold miners. And if we come in and we look at, we look at some of the gold miners out there, they're not all equal. Here's AUY. This thing, gold, is outperforming AUY in a huge way. This is not outperforming gold, right? AUY has some major issues. It's a spec way to play gold, but a very aggressive and very risky way to play it, right? What about Newmont, NEM? Here we go. A little bit better chart, some higher lows, some higher highs, right? Breaking into key levels, breaking into a new high here today. Newmont is outperforming the gold, and it's outperforming the gold miners. It's a top performer within that group. Who do you want to get exposed to, right? Generally, the top performers are going to continue to rise. GOLD, Rheingold. This one we talked about right back here when it made this big move, and it's now gone through a nice little consolidation, broken out of that consolidation, and in a very bullish type of a pattern. So, you don't have to trade that chart on gold itself. There are some miners, specifically with Newmont and Rheingold here, that are outperforming in a very nice way with some very positive chart dynamics. If you look at some of the others, in the gold space, they can look a little different. Here's GG, right? This looks quite a bit different. Big drop right back here in October. Has been trying to climb back up, trying to maybe fill this gap. But do you want to own GG or do you want to own Rheingold? Who's going to go up the most if gold goes higher? Right? You can probably guess that. Here's Harmony Gold. Right? This one here, a little bit different of a chart. Right? A little bit different of a chart, a little bit different of a price scale associated to it. So, it's one of those where when I look to get exposure to the bullish side of gold, my favorite way to play it is the GDX. Just the gold miner ETF. And if we look at, who kind of comprises this, we'll just come into Google and type in GDX components, right? GDX components. We can see who the top holdings are. And you see right here on top, Newmont Mining, 10%, right? Barrick Gold, 9%, Franco-Nevada, Newcrest, AEM, Agnico. Here's gold, Rheingold, GOLD in there. But, for me, the best way to get exposure to the gold miners is with that GDX, because you can offset some of the risk that is inherent with some of the individual names. As different outages happen, different mining facilities and that kind of stuff, that is very common in this space, any commodity space. And so if you want to play an overall industry trend, generally the industry ETF is the best way to take away some of that risk. If you want to kind of get a little bit more aggressive, that's where you go and take the top performers, the recent top performers. If we come in here to, let's see if we can find it in here. Let's come into Screener here on Finviz, and let's go to industry. Let's come down to gold. There we go. This is just going to give us a bunch of the gold miners. And we come into technical. And let's just go with change. No, that's not giving it to us. Let's go performance. Here we go. Performance over the course of this past quarter. Who were the top performing? AU, Rheingold, GOLD, Barrick, GFI. You can see who the top performers have been from Tahoe to AEM. Here's Newmont Mining, right? And if you want to be more aggressive when it comes to being in this gold space, get rid of the gold ETF and go with some of the top performers that are in this space, right? Tahoe is a really interesting chart. Definite bullish principles associated with that. The gap down, bleed on lower, gap back up, and rising on back, and you have a huge kind of island reversal in the chart here. But again, it's going to be a more aggressive way to play it. Keep in mind that if you go out and buy gold or buy GDX, or you buy something like a Tahoe Resources, and all of a sudden you see gold's up $5 and Tahoe Resources is down 1%, it probably doesn't mean a heck of a whole lot in the short run. These things are very common that in the short run they will lose some of their tendencies. They will play off. They will trade off tendency for a day or two from time to time. That is common, and so if you're going to go off of tendency, go off of longer term tendencies, not some of the shorter term tendencies. For the challenge, Rheingold options are a little bit tough. Pretty much Newmont and GDX are my options there when it comes to trading options on gold, and I look at them each day, and I haven't found an entry point that I love here just yet, but today's action is very strong, and the type of action that suggests breakout here overall. Rarely do gold miners close at their highs, so I do not like to buy them on their highs. I tend to like to buy them on dips rather than rips. But, if we see this action hold up today, tomorrow dip just a little bit, that becomes a very nice pickup spot here for that. Now, last thing I want to take a look at when it comes to gold is the seasonality, right? Let's take a look at the seasonal element when it comes to gold. Let's go back. Anytime we go back, seasonality, 10 years is a good number. But seasonality over the last 10 years, December hasn't been too hot for gold. Hasn't been great for gold. But when has been a really good time for gold? January, February, beginning of a new year. That's been a really strong time for gold. If we look at gold miners, right, we're going to see something also here. We're going to see that December, it's averaged down 1.5%, but it has gained 60% of the time. Why? Because it had 1 year that was really, really bad, right? But December overall has been pretty good for the gold miners. January and February have been the two best months for the gold miners. So we see some bullish chart improvements, some bottoming, some foundation being built. We're not there yet, but we are heading into a much more bullish seasonality element for gold and for the gold miners, and so definitely worth having on the radar, definitely worth having on any trade watch list, investor watch list as we go through the next 30, 60, 90 days here in the market. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.